second, give me a second, give me a second, give me a second. Give me a second, everybody. Sound check, sound check. YouTube, come on. Are you streaming? Give me a second, everybody. I need to refresh the page, maybe. Alright, we are live. Yeah, I'm sorry, everybody. I'm late 5 minutes. I'm sorry about that. So, lesson number 3 today. And good morning, good evening, good afternoon, students and traders from all around the world. This is Mike, the FX boss. And this is the Professional Forex Trading Course 101. Never forget, trading is a learnable skill when you learn in the correct way. Alright? Well, what do you mean when you learn you can learn in not the correct way, right? And also, what is the goal? If you're a complete beginner, like zero experience, my goal for you is to bring you from zero to a millionaire trader in not 1 day, not 6 months, not even 1 year, but in about 3 years. On average, everybody, in an institutional way. What is the institutional way? First the analyst, then the trader, and this is the path. How to become a professional trader in an institutional way. 1 year, at least 1 year, you are going to learn how the market works. Right? Forex Course 101, it's all about the market. Okay, we are going to talk about strategies a little bit, but it's all about the market. Then, if you want, not mandatory, you can jump into the Forex Course 202. Alright, Forex Course 101 is the learning phase, Forex Course 202 is the money phase. And here you're going to learn how institutions make money. There is a process to that, a way of thinking, alright? And not mandatory, not everybody needs this. Forex Course 303, then it's all about the trader. And this is if you need maybe, you know, why some traders are driving Lambos and others are buying pizza, right? So, for the grand majority of us, it's Forex Course 101, Forex Course 202, it's enough. But maybe for somebody not, right? So we need to go to deep diving in psychology and other stuff. And you're going to graduate from this course when, number 1, you have your chart set up and ready for trading. Number 2, you have a strategy in place, not yet, it's too soon. And number 3, you have a complete understanding on how this market works, so you can analyze the market and make an educated prediction. Please disclaimer, these webinars, these streams are not trading or investment advice. We're here to learn. And from questions and for questions and homeworks, you have my Gmail and Skype if you want. Alright, everybody? Now, that being said, let's move forward and open classes maybe. Give me a second. Give me a second. Otherwise, we're going to, let's see how fast JForex is today, the platform. If it's too slow, then alright, give it a second. Alright, so, or maybe here, right? We're going to clone chart. There you go. Clone chart and indicator out. Alright, everybody, so EuroCAD monthly chart. EuroCAD monthly chart, we've established so far, right? Recap. Today it's lesson number 3. And so far, build your charts, right? Have your chart set up and ready for trading. So far, this would be the lower band somewhere and clone. So far, this would be the upper band somewhere, alright? And then yesterday we talked about highs and lows, right? Highs and lows. Highs and lows. So if you go in here, everybody, EuroCAD monthly chart, and if I connect low to high, high to low, low to high, high to low, alright? And I need to follow the rules, right? We've learned what is a high, what is a low. So low to high, high to low, low to high, and then high to low, low to high, high to low, low to high, high to low, low to not a high, high to low, and if I go forward, if I move forward, high to, so it's not this low, not this low, this is the low. Why? Because a trend is a sequence. High to low, low to high, high to, this is a low but this is not a high, so I need to move to another one. Next one, next one, and I'm not sure about this one. Yeah, so high to low, low to high, high to low. Give me a second. And then low to high. And now this is not a low, so low to high. And this is not a low. Low to high, high to low, low to high. Not a low, not a low, not a low, low to high. And high to low. Wow. So this would be your chart, right? Is EuroCAD monthly chart in an uptrend, or is EuroCAD monthly chart in a downtrend? So this is another low, but this is not a high. Tell me everybody, how do you see EuroCAD monthly chart? Is EuroCAD in an uptrend? Is EuroCAD in a downtrend? You can also type in the chat, oh, it's nothing. And then we're going to talk about the different market behaviors. Do you see EuroCAD monthly chart in an uptrend, downtrend? Maybe nothing, maybe 75%, right? Yesterday we were talking about that. And those are black and white rules, not subject to interpretation. I have a confirmed uptrend when I have a minimum of 2 highs and 2 lows, where the second high is a higher high and the second low is a higher low. So try to understand what is what. Hedge fund trader Clara, hedge fund trader Ala, hedge fund trader Julius, hedge fund trader Yarek, hedge fund trader Sink, hedge fund trader 4K, and everybody else. Try to figure out, is EuroCAD monthly chart positioned in an uptrend, downtrend maybe, or it's nothing. You cannot say, oh, it's really not, I don't have anything. Why is this important? Because the higher time frame controls price action and movement on the smaller time frame. So if you believe that this market is whatever, 50%, 75, 100% uptrend, or if you believe that this chart, this market, EuroCAD monthly chart, is positioned in a downtrend, whatever you believe, this means that the monthly chart is going to grab all the smaller time frames and is going to bring them up. Or the monthly chart is going to grab all the smaller time frames and is going to bring them down. Alright? Boss, what are you trying to say? If you are wrong on the direction as an analyst, not a trader yet, we're far, far, far away. If you're wrong on the direction as an analyst, you are going to lose. Does this make sense? Oh, but I'm on the daily chart. It doesn't really matter. The higher time frame controls price action and movement on the smaller time frame. Make sense? If the monthly goes up, it's going to bring up the 15-minute chart, the 1 hour chart, the 4 hour chart, the daily and the weekly. If the monthly goes down, it's going to bring all the smaller time frames down. So you could be a scalper and lose. Does this make sense? The higher time frame controls price action and movement on the smaller time frames. So how do you understand Euro CAD on the monthly chart, highs and lows? And then we can, give me a second. We can clone the chart and we can go to the weekly. Not this one, this one. Those two. Alright? We can go on the weekly and we can see something different too. Can you see it, everybody? This is the monthly, right? And now this is the weekly. What do you see on the weekly? If you start connecting highs and lows, right? You don't need to do from the beginning, but if you connect low to high, high to low, low to high, high to low, low to high, high to low, connecting highs and lows, right? And low to, give me a second everybody, low to high, high to low, what do you see? Based on the rules. Are you seeing an uptrend? Are you seeing a downtrend? The yellow is exactly, the yellow is from the weekly. Now the red and the green, it's from the weekly perspective. Why is this important? If you see, we're going to talk more about in about 4 months when we go into learning the skill of retracement, trading and timing. So what you see, maybe, just maybe, right? If you say, just an example, but do we agree, everybody, it's still in the making, do we agree that this is a higher low? Type in the chat, yes I agree, this is a higher low. Or type in the chat, no I don't agree, this is not a low. I mean, this is not a higher low. Is this a higher low? Exactly, a center candle with 2 candles on the left and 2 candles on the right. Is this a higher low? Alright. So, I might see from the monthly a 75% uptrend. Agreed, everybody? Violet, alright. I might see, because it's a higher low, I might see, not being right or wrong, this is just an example, I might see, this is theory, 25%, 25%, 25%, I might see 75% confirmed uptrend, agreed? But if I go on the weekly and I want to buy, right? Am I really buying an uptrend? And this concept, everybody, applies on all time frames. If I buy the market right now on the monthly or the weekly, you know, am I buying an uptrend really? See how 2 different time frames are telling you 2 different stories. How many of you get confused from the different time frames? The 15-minute chart is showing you something, the daily chart is showing you something else, the 4-hour, 2-hour is showing something else too, and then the weekly and the daily are showing you something else again. How many of you are get confused? Beginner trader stock. Alright, everybody? So, homework, right? You all love homeworks from the course. Alright, homework. You can do 1 chart per day, everybody. Homework, chart, or put on the chart. Put on the chart the trends. Alright, everybody? Put on the chart the trends. Start with the monthly. Give me a second. Suggestion. Start with the monthly. Then go to the weekly. Then go to the daily. Then go to the 1 hour, 2 hour, 4 hour. Alright, everybody? Not vice versa. Alright? Now this is something that you don't want to hear. The smaller the time frame, the more skilled you must be to chart in the right way. Does this make sense? The lower the time frame, the more skilled you must be in terms of charting the correct way. So start with the monthly, and a monthly it's no brainer, right? You can easily see, oh, this is a low, this is a high, this is a low, this is a high. You are seeing highs and lows. You are studying the charts as a good analyst. You are studying the charts, alright? And then you go to the weekly, alright? So what are we talking about? This is the monthly chart, alright? This is going to be the weekly chart, a little bit more challenging, alright? We're talking about, so highs and lows, we're talking about swings, you know, the waves. On the monthly, let's go put this in black. On the monthly it's going to be easy. Low to high, high to low, low to high, high to low, low to high. Then the weekly comes around, and you're going to have more highs and lows. When you go on the daily, you are going to have even more. Inside the weekly and inside the daily, you are going to have even more highs and lows. Alright? And this is where beginner, not traders yet, but beginner analysts, we make mistakes. The smaller the time frame, the most challenging it's get to chart in the correct way. Alright, so it's not that you can do whatever you want already, but suggestion, start with the monthly, alright, then slowly go to the weekly. Try to understand how the monthly works on the weekly, and then if you want, you can go to the daily. Alright, everybody? Suggestion. Alright, now let's talk about market behaviors, alright? You have three tradable market behaviors. Everybody? You have 3 tradable market behaviors, and you have 2 non-tradable. Right? Beginner trader stock, 2 not tradable. Alright? And this for complete beginners. Alright? So what are the 3 tradable market behaviors? Well, we have the uptrend to trade, it's a tradable market behavior. You have a downtrend, it's another tradable market behavior. And finally you have consolidation, another tradable market behavior. So give me a second. Now, if you buy the uptrend, the stop loss goes on the previous confirmed low. Alright? Something like this. If you sell a downtrend, the stop loss goes on the previous confirmed high. No brainer, right? It's an uptrend, it's a downtrend. And if you trade consolidation, if you buy the upper band, or if you sell at the top, you know, the ceiling, you know, on the roof, you know, and so the stop loss would go, give me a second, and clone. Stop loss would go above in here somewhere, and clone one more time. The stop loss, if you buy, the stop loss would go down in here somewhere, right? If you buy, this is the stop loss, and if you sell, this is the stop loss. So those are the 3 tradable market behaviors that you as a beginner trader, not a trader yet, you are still an analyst, you should study and try to figure out, alright, if I buy in here, where would be the stop loss? If I sell a downtrend on any time frame, where would be the stop loss? If I buy or sell consolidation, where would be the stop loss again? Okay? Now, does this stop loss make sense to you? Type in the chat, everybody. Does this stop loss on the uptrend make sense to you? Type in the chat, yes, it makes sense, or type in the chat, no, it doesn't. Does this stop loss on the downtrend make sense to you? Example. Give me a second. Does the stop loss on the uptrend make sense to you? Does the stop loss on the downtrend make sense? And does the stop loss on the consolidation? So those are 3 tradable market behaviors that you, as a beginner trader, you can play around and have fun and start to study, alright? Alright, now there are 2 non-tradable. Now the first non-tradable market behavior is something like this. It's called the pennant or the wedge. Alright? And why I keep repeating you, this is beginner trader talk, because some advanced or professional traders, they do trade pennants, alright? But this is not for you, the beginner trader, the junior analyst, alright? So why is this behavior categorized as a not tradable? Look at if you compare this not tradable or non-tradable market behavior, give me a second, there you go. If you compare this non-tradable market behavior to an uptrend, does the uptrend make sense as a market or price action movement? It makes sense, right? You would buy somewhere in here, you would buy a retracement, whatever, not to get too sophisticated yet. You would buy somewhere in here, stop loss goes in here, and take profit. If the market goes your way, it's going to be somewhere up in here. Not to get too technical today, it's lesson number 3, but then you also talk about risk-reward ratio, right? If I want to risk 1 Bitcoin, 1 euro, 1 Ferrari, then I want to make 2 Bitcoins, 2 euros, 2 Ferraris, or dollars, or whatever. Agreed? Now, no, you don't need to this. Again, I don't want to get too sophisticated, but we are having this conversation. When you look at the uptrend, and you might say, oh yeah, the stop loss makes sense, kind of. I maybe really don't understand it, but this would be a stop loss level. So if the market goes down and stops me out, then the market is not making higher highs, higher lows anymore. It just made a lower low. So stop loss makes sense. And risk-reward ratio, maybe I'm still learning, I'm 2 months in the markets, 3 months in the markets. Risk-reward ratio, I'm still learning. Now, translate all of this data, these statistics, this approach to this sucker in here. See how the uptrend, now the downtrend works in the same way, same logic. Consolidation, same way, same logic. Do you see how the wedge or the pennant, it's not compared to this one. Let's talk about the stop loss, right? So where would you put the stop loss? It doesn't really matter if you would, give me a second, it doesn't really matter if you would short the market in here. Let's code this in red. And it doesn't really matter if you would buy the market up in here. How would this go, this not tradable pattern, how would this go in terms of stop loss and take profit and risk reward ratio? type in the chat, oh, this is easy, this is all the same. Or type in the chat, yeah, maybe those two kind of, they don't look, they don't look the same. So example, right? Let's say that I'm shorting the market in here because it's a lower low, but it's making, so why this is not suitable? Maybe if you're advanced, alright, but why this is not suitable for the beginner trader? Because I'm going to put the stop loss up in here, alright, but I'm seeing the market making lower, so shorting the market, I'm seeing the market making lower highs, but then is something strange happening. The market is not making lower lows. See? The market's making higher lows. And if this is the daily chart, or if this is the weekly chart, this game could go on for months. And sometimes it does. So I'm shorting the market here, stop loss, it's, I don't know, maybe right place, maybe not the right place, and just an example, if this is the, the risk reward ratio, and give me a second everybody, alright. So if I go 1 for 2, right? Beginner trader stuff, not 1 for 1, 1 for 2. Now if I enter in the market like this, and I'm expecting the market to fall, this is my expectation, and this is the 1 hour, 2 or 4 hour chart or the daily, then emotionally what is going to happen? Monday, Tuesday, Wednesday, Thursday, Friday, see? Monday I'm going to short the market, and maybe the market is going to go down, 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 but Tuesday morning when I go to the chart, the market's back up. Exactly, and I got frustrated. And then on Wednesday morning I'm happy because the market's falling down again, that I'm going to make my profit, risk reward ratio, this is the take profit level, but on Thursday night this market is back up. And it's going on and on and on. See how this is emotionally draining to you? Make sense? This is a pattern compared to the tradable ones, beginner trader talk. This is a pattern that it's, it's waving, it's moving up and down constantly. I can see retracement, extension, retracement, but in here, this is emotionally draining. It's up and down, and it doesn't move. Agreed, everybody? Do you have the experience that you've entered in a trade and you've been thinking, oh, this market it's not moving, it doesn't move. Why it's not moving? It doesn't move. For 1 week, or if you're on the 15-minute chart, it could be 1 day, 2 days, 3 days. If you're on the 4-hour chart, it could be a week or 2. If you're on the daily chart, it could be 3 months. Agreed, everybody? This is emotionally draining. But this is not even the villain. Why? Because advanced traders, professional, not everybody, but some of them, they would, you have this pennant too, could be something like this, right? Or could be other way around. Give me a second. So don't waste your time. Alright, everybody? Oh, but Gianpaolo don't compare yourself to Gianpaolo. Gianpaolo is a professional trader. You are not. You are 5 years behind. Right? Beginner traders, this is not for you. Don't waste. If you want to listen to me, listen. If you don't want to listen to me, don't listen. Doesn't really matter. Alright? But I'm telling you, don't waste your time trading this one. Alright? And don't waste your time trading this one. And it's all common sense, right? I mean, why would you? You have those three beautiful patterns, uptrend, downtrend, consolidation. Why would you waste your time and energy to trade those patterns here? You know, those, you know, it's draining. You know, you're going to spend time, you're going to waste margin on the account, capital. All right? Now, there is a villain that not even professional traders know that they can't, but they are not going to make any money ever. And it's called chaos. Alright? Now, this is the villain that even a professional trader loses money. And if anybody tells you something different, call him here. Come to Dukascopy webinars and talk to Mike. Alright? If somebody tells you, oh, I'm making money out of this, he's lying, liar, or she's lying, alright? And no, I'm not arrogant. I'm going to explain the logic behind. Give me a second, alright? There is a logic behind all of this. Alright? Now, so similarly to the pennant, you know, this is called chaos, you know, and why nobody makes money? No professional trader. If you are lucky, alright, but talking about logic, alright, so let's say that you are, I mean, how would you, let's say that you are seeing everybody higher highs, right, and you are seeing lower lows. I mean, what would you do? This is the first one, see, it's already beginning. Would you buy or would you sell? And if you say, well, boss, but this is easy, I would buy. Well, but what about the lows? It's making it's making lower lows. Why are you buying lower lows? Doesn't make any sense to me. This is not an uptrend. Do you see, everybody, why it's called chaos? Because it's making higher highs and it's making lower lows. It's expanding. But if easy one, I'm going to buy. Why are you buying when you just made a lower low? It doesn't make sense to me. Why would you buy a lower low? Isn't this an indication of a downtrend? And then you say, yeah, all right. I'm going to short the market. I'm going to short the market because it made a lower low, and I'm going to put the stop loss above this high. Would be this a fair assessment? There is a logic, right? So, alright, it made a higher high, now it made a lower low, I'm going to sell the sucker. And let's say that you short the market, you wait for a retracement, whatever, you know, and give me a second. So on this smaller time frame, you would see a retracement, you know, something like this, and you would short the market. Alright, on the blue, you would short the market on the blue, and the stop loss goes above this high, and the market would, bam, stop you out. This is one, but this is not even the story. Then you would yell at me, oh, why, see, I told you to go long, we should go long, you know, I knew that the market is going to go up. And I'm going to say, all right, you know, you are smart, you know, what do I know? You know, you're smart, so let's buy the market, all right? So, because it made a high, I cannot compress this one, okay. Let's buy the market, because it made a higher high. And not sure if, okay, I can, so. Same story, you know, you're going to, the same way down here, same story up in here, you're going to wait for a retracement, alright, and you are going to buy the market. Where would you put the stop loss? Answer, if this is the first up leg, if this is the first up leg, right, the market made a higher high. Right? The market went from down here to up to here. Alright, the market made a higher high. And the market would retrace, you would buy, stop loss down in here because this is the up leg, and then you would go and bam again, stop you out again. Can you see it, everybody? And you would tell, alright, it made a lower low, you were right, so alright, I'm going to short the market again. Short the market again. Stop loss up in here, bam, stopped out again. Short the market again. Buy the market again. Stop loss down in here, bam. Can you see, everybody? You cannot, I'm not talking about luck. I'm not talking about luck. You cannot win the chaos pattern in a logical, technical way. Does this make sense to you? Every single time that you do something on logic, based on logic, because you buying an uptrend, it's a matter of logic. It makes sense. The market's making higher highs, higher lows, therefore I'm going to buy. This is common sense, right? And when the market's making lower lows, lower highs, you are going to sell the sucker. This is common sense too, right? If the market's going up, why would I sell? I'm going to buy. And if the market is moving down, it's waving down, why would I buy it? I'm going to sell. In consolidation, in the range, I'm going to do the same. Everything on the left side, the tradable market behavior, everything in here is based on common sense and logic. If you go to chaos, this pattern, you can see that it's making higher highs and higher lows, right? But when you want to apply some logic to the pattern, whatever you do doesn't make any sense. Do you agree on that? And even if you want to be outsmart the market, like, alright, now I'm going to short it. I'm going to short it up in here because in my prediction the market is going to come down here, and if you put the stop loss up in here or above in here, and the market then is going to do something like this, it doesn't make any sense. Doesn't make any sense, I'm going to put the stop loss up in here. Well, this is not going to save you, just a matter of time. You're going to be stopped out again. And if you say, I'm going to short the market, why are you shorting higher highs? It doesn't make any sense. And if you say, alright, I'm going to short the market in here, in terms of trade what you see, alright, then you are speculating. Don't we agree? When you are buying the uptrend, up in here, talking about direction, thank you very much, talking about direction, this is you trading what you see. It's an uptrend, making higher highs, higher lows. If you short the market down here, it's based on what you see. I can see lower lows or highs, right? But when you see something like this, and you say, well, I believe this market is going to come down to here, this is you speculating. But you said the same. No, this is where I'm trying to get that you must understand. These patterns make sense, they are logical. This pattern doesn't make sense. Alright, everybody? You have no professional trader in Japan, Alaska, Croatia, Finland, Brazil, USA, Alaska, Switzerland that is going to make money in here. We can get lucky, right? We can try something, and we can take a chance and we short the market in here and we get lucky, right? But in terms of you learning how to be a consistently profitable trader, Alright, now this goes on a deeper level. You can replicate what you are doing here. You can replicate what you are doing here and in here. This is rule based, but you cannot replicate this one because this is not rule based. Alright, everybody? So don't trade this one. If you want to listen to me, you listen to me. If you don't want to spend time on those suckers, you know, I mean, my life is not going to change. Now this is theory, right? And if we delete, let's go on EuroCat, let's go on. Everybody, if you have a currency pair that makes you trouble, just type in the chat. Maybe you have some patterns that are not good there, right? So EuroCat weekly chart. Let's try to find some. EuroCat weekly chart, EuroCat weekly chart, EuroCat weekly chart. Trying to find chaos maybe. Alright, maybe chaos. Well, it was short-term lived, but do you see in here? This is what? Weekly chart. This chaos was not that obvious, but it was short-term lived, right? See, everybody? You would short the market. Now remember, this is the weekly. You would short the market, and if you would put the stop loss in here, you know, the market would stop you out once, and the market would stop you out twice. And if you go on the daily chart, see, you are shorting the market, right? You shorted the market in here on the daily, and then bam, stopped out, made a higher high. And then you would say, oh, this market's still going up or down, whatever, you know. It doesn't really matter if you buy or sell. Let's say that you short the market again, right? Oh, I'm shorting the market this time it's going to be a winner, this time counter trend line break. I'm shorting the market and bam again, higher high again. Can you see it, everybody? It's going to stop you out every single time until you understand spatially that this market is not tradable. There is another word in vocabulary. This market is not efficient. Alright? When you're going to hear somebody telling you, oh, it's not an efficient market, what does this mean? It's messy. It's messy. You cannot read the chart clearly as an analyst. You cannot clearly see what's happening, what's not happening. And then, of course, you know, the pattern was over. Now we're on the daily chart. Daily chart. Trying to find chaos or maybe the pennant. Chaos, pennant, chaos. This was nice. EuroCat, it was daily chart. EuroCat, give me a second. Well, you have downtrend, uptrend, right? So it was quite... Alright, next one. So let's go to AUD CAD maybe. AUD CAD daily chart. AUD CAD daily chart. Let's find some not tradable patterns. And again, not that obvious, but on the smaller time frames, you have a wedge here. Pennant. Can you see it? So if we, now this is the daily. If we go on the 15-minute chart, if you go on the 15-minute chart, can you see in here? You know, maybe too small, right? Because you could have make some money on the. If we go on the 4-hour chart example. So this is the market, right? And here you would sell short the market, and the market will go down. Now you don't see this one yet, right? And the market will go back up to the similar level. And you would say, all right, I'm going to sell again. Or maybe I'm going to buy, right? I'm going to buy the market. Higher high, low to high, higher low. The market is not in a downtrend anymore. Alright? The market just made a higher high up in here. So let's say I'm going to buy or sell, whatever. Now, see, if I bought the market already, I'm losing. Maybe I didn't lost yet, but I'm losing. Stop loss down in here, or maybe stop loss down in here, doesn't really matter. But if I'm shorting the market, you know, oh my gosh, and bam again. If you're lucky, you are not stopped out. If you're unlucky for 1 pip, 2 pips, do you see how emotionally draining this is? You're shorting the market and the market is not going anywhere, right? And if you bought the market, then finally, you know, it took some time, all right? You would be stopped out in here, maybe not in here. This is just an example. But I want to find chaos again. Chaos. Oh, this again is short-lived, but still. Higher highs, lower lows. Oh, I remembered. It was AUD USD. AUD USD was making some problems to some traders. AUD USD. AUD USD. AUD USD. Give me a second, everybody. AUD USD. AUD USD. Not sure where, but maybe, you know, maybe like this one. Maybe. Higher highs and lower lows. Can you see it, everybody? This was, and again, if this happens to you, pat yourself on the back, it's totally normal. This could be on any time frame, not necessarily the daily chart. But if you would short the market anywhere until this pattern was over, right? Because every pattern has an ending, right? Patterns change. But look in here, every single time that you shorted the market went up. You've shorted the market and the market went up. Why would I short the market? Because it's making lower lows. See? Lower low, lower low, lower low, lower low. You can go vice versa too. But, and we're going to go vice versa. Just try to understand, every single time that you've shorted the market made another higher high. And Clara was asking, oh, and Clara, you deciphered correctly this one. You've lost 2 times, then you deciphered correctly. See, everybody? You could be short the market 1, 2, 3 times, 4 times, 5 times maybe. You could be losing 5 times before the market gets out of the chaos pattern. Alright? Now, what if you would buy? Let's say that you bought in here, you know, the market went down. You know, you bought in here and the market went down. You know, whatever the strategy, the methodology, the setup, you bought the market and the market went down. And you bought the market and the market went down again. See the problem, everybody, on the chaos pattern? And lastly, you bought the market and the market went down again. If I didn't convince you not to trade this sucker, then I'm sorry. Alright? But it's all good news. What's the good news, boss? Type down, write this down. It takes time. This is lesson number 3. It takes time. But if you do 3 trades that are logical, that they make sense, right? If you buy an uptrend 3 times, or if you sell a downtrend 3 times with the stop loss in the correct place, alright? And if you are stopped out 3 times consecutive, there is an 80% chance you are in a chaos pattern. Wow, isn't this great information, everybody? Boss, can you repeat please? Yes, sir. If you are stopped out 3 times, consecutive losers, alright? But you must do the correct things, put the stop loss in the correct place. If you are stopped out, let's say that you are trading an uptrend, and you are stopped out on the uptrend, and then, because you are stopped out logically, then you go the other side around, you short a downtrend. It makes sense. And you are stopped on the downtrend again, this would be trade number 2, and you go the other way around again because you are stopped on the downtrend, and if you are stopped for the 3rd time, there is an 80 to 85% chance. Somebody say it's a 90, maybe. There is a 90% chance that you are in a chaos pattern. Alright? So stop trading. Golden nugget for you. Alright? Trading concept. Trading concept. If you are stopped out 3 times consecutive, hopefully my English is correct, consecutively, alright, then stop trading, because or you don't see the market clearly, or you might be in a chaos pattern. Alright, everybody? Make a screenshot, photo, whatever, and type in the chat done, and then we are done for the day. If you are stopped out 3 times consecutively, I'm not sure, help me out with the grammar, everybody, most likely it's not correct. You bought an uptrend, market stops you out. The next one on the same currency pair, same time frame, it's a consecutive trade. You shorting a downtrend, you are seeing a downtrend. The market stops you out again on a downtrend, and there it is. And then you go for the 3rd trade, and it's an uptrend, and you can see it's an uptrend, and the market stops you out. You know? Stop trading. It's not a rule, it's a concept, because or you don't see the market clearly. This is about the skill, right? Maybe you need to practice more, study the charts, get a feeling what is what, you know. Alright, start connecting, charting the highs and the lows in the correct way. Or you might be in a cave, because why? It's difficult to spot it. Make sense? Your brain is going to see something like this, and it is, and it is. Your brain is going to see first an uptrend, and there is, then your brain is going to see a downtrend, and there is, and there your brain is going to see another uptrend, and there is. Right? What your brain and my brain is not capturing is, oh, this is the why. Does this make sense to you? You cannot win uptrends and downtrends in chaos, because every single time that you are going to buy an uptrend, and there is, and every single time that you are going to short sell a downtrend, and there is, you are going to, you and me, we're all the same. We are going to lose. Alright, everybody? So homework, try to spot some of those suckers, the villains. Alright? try to find some tradable patterns and try to find some not tradable patterns and try to play a mind game. How would you trade those? This is the homework. Whoops. Those. Alright? Try to find some tradable patterns and ask yourself, alright, this is an uptrend. You know, what I would enter, how would I enter? You hide the future, of course. How would I enter? What would I do? Alright? You would hide the future. This is just one, you know, where would be the stop loss? How would I end downtrend the same? Alright? So you play a game, it's a mind game, you know, how would I enter? And try to find also the villain, you know? And figure out, alright, what would I do in here? Would I buy? Would I sell? How would I buy? You know, you hide the future. Whatever you might do, there is no right or wrong. You know, you say, oh, I'm here, what would I do? Would I buy? Would I sell? If I buy, where would be the stop loss? If I sell, where would be the stop loss? And play around. Alright everybody, our time is up. See you back tomorrow. Until tomorrow, stay strong and trade and learn and chart like a responsible business owner, because you are the business owner of your account.